Sushil Kumar Goyal, Central Council Member, ICAI. CMA Raju Iyer Pichumani, President, ICAI Cost. Mr. Awais Yasin, FCMA, Honorary Treasurer, ICMAP. Professor Lakshman Watawala, President, ICMA SL. And Mr. Mohammad Mamoon Rashid, FCMA President, ICMAB. We'll also have Mr. SMS Sanjay Bandara, FCA, President, ICASL. Ladies and gentlemen, and at the end, there will be a summing up session by Mr. Topan Kanti Ghosh, presentation of crest and vote of thanks by President ICAB. So this is the program. I would like to request now the chair of the technical session 1, Mr. Mahbub Ahmed, director to the board of Bangladesh Bank, to please take your seats at the dais. Technical session 1 is going to start. The session chair will be Mr. Mahbub Ahmed, director of the board of Bangladesh Bank. Tea break will be there after the first technical session. Yes, ladies and gentlemen, I would request Mr. Mahbub Ahmed, director to the board of Bangladesh Bank, to kindly take his seat at the dais. Mr. Mahbub Ahmed. Former Senior Secretary to the Government of Bangladesh, Mr. Mahbub Ahmed. Sir, I request you to kindly take your seat at the dais. Sir, please take your seat. Mr. Mahbub Ahmed. Now I would request the paper presenter on sustainability reporting and green finance, Professor Dr. Javed Siddiqui. Would you please take your seat at the dais? Professor Dr. Javed Siddiqui, Alliance Manchester Business School, Accounting and Finance Division. He's a professor of Alliance Manchester Business School, Accounting and Finance Division. And then to be on stage, I would request Mr. Mohammad Al Maruf Khan, FCA, partner, Halada Yunus and Company, Chartered Accountants. Mr. C.A. Chandrasekhar Vasant Chitale, Central Council Member, ICAI. Dr. Aditi Haldar, Director, Global Reporting Initiative, GRI, in South Asia. Mr. Numan Vithanage FCA, Council Member, ICASL, has joined us virtually online. Yes, ladies and gentlemen, our session chair, former senior secretary, Mr. Mahbub Ahmed, is requested to run the show. But before that, I would request CEO of ICAB, Shubhashish Bose, to kindly introduce the session chair. CEO of ICAB, Shubhashish Bose, to kindly introduce the session chair.
Okay. Thank you. Good evening to everybody, and welcome to the technical session 1. We have got Mr. Mahbub Ahmed, former senior secretary to the government of Bangladesh, to be the chief guest of this session. I would like to say a few words about his introduction. Mr. Mahbub Ahmed, former senior secretary to the government of Bangladesh, served the government for last 35 years in different positions. He successfully completed his tenure as the alternate executive director of the Asian Development Bank, Manila, Philippines, from March 9, 2017 to March 8, 2019. Prior to that, he assumed the office of the finance secretary on July 6, 2014, and continued up to February 28, 2017. Mr. Ahmed earlier served as the Senior Secretary, Ministry of Commerce, Secretary, Ministry of Youth and Sports, and Additional Secretary, Finance Division, Joint Secretary, Ministry of Primary and Mass Education, etc. He also served as Director of Board of Bangladesh Bank, Central Bank of Bangladesh, Member Board of Bangladesh Institute of Development Studies, Director Board of Biman, Bangladesh Airlines Limited, Director Board of Infrastructure Development Company Limited, Member Board of Governors, Bangladesh Public Administration Training Center, Member Bangladesh Judicial Service Commission, and many other high-level committees of the government. In his long career, Mr. Ahmed actively participated in different bilateral and multilateral meetings and negotiations, seminars and workshops. He led successful trade missions to different countries and regions, especially in South America, Central Asia, and Europe. As the Youth and Sports Secretary, he played an important role in undertaking National Service Program for unemployed youths in 2010 and arranging ICC World Cup Cricket in Bangladesh 2011 and South Asian Games 2010. Mr. Mahbub Ahmed secured 6th position in the BCS 1982 regular batch and started career in 1983. Prior to that, he obtained BSS honors and MSS degrees in economics from Dhaka University. He completed Hubert Humphrey Fellowship in Finance and Development Economics at the American University, Washington, D.C. in 1992-93. He also developed his professional skill and knowledge through study and training in the various renowned universities of different countries, along with the International Monetary Fund, the World Bank, Asian Development Institute, etc. I would humbly request Mr. Mahbub Ahmed to chair the session, and afterwards he will moderate the session accordingly as per the schedule given to him. Mr. Mahbub Ahmed, please.
Thank you, Mr. Shubhashish Bose, for introducing the chair. Chair, Mr. Mahbub Ahmed. Sir, over to you. Please use your microphone. check.
Assalamu alaikum. Good evening. I welcome you all to this technical session 1 on sustainability reporting and green finance, a regional perspective. As you know that we have started late and our allocated time originally was 1 hour, but we'll try to make it 50 minutes or 45 minutes. And from that point of view, I'll request keynote speaker if he could limit his presentation 10 to 12 minutes, and each panel speaker, if they could speak for 5 minutes. Is it okay? Okay, then thank you very much. Before I go to any request to Dr. Javed for his presentation, let me introduce him. His profile is with you, I believe, in the book. His all detailed credentials are there. I'll be in brief. Professor Dr. Javed Siddiqui is a professor of financial reporting at the Alliance Manchester Business School, the University of Manchester, UK. His primary field of research are auditing, corporate governance, and corporate social responsibility reporting, especially in the context of developing economics. Professor Siddiqui worked with international development agencies such as World Bank and UNCTAD, Big Four accountancy firms, as well as national level professional accountancy bodies. Professor Siddiqui was an external member of the Financial Reporting and Corporate Governance Committee of the Bangladesh Securities and Exchange Commission. He is currently sits in the Academic Advisory Panel for the UK Commonwealth Scholarship Commission. Now I can request Professor Javed Siddiqui to present his presentation. Thank you.
Okay. Thank you very much. Good evening and welcome to my presentation. I would like to thank the Institute of Chartered Accountants of Bangladesh for inviting me to do the keynote in this technical session. I know that we are a bit way off in terms of timing, so I'd like to be very relevant and stick to my topic. In terms of my presentation, I'll talk about green finance and this recent trend of sustainability reporting that has emerged all over the world. In terms of green finance, of course, we've seen a development in recent days. A fresh impetus came in 2026 in the climate, in the World Climate Finance Congress in Glasgow, and where world leaders actually expressed their commitment towards climate finance. That has resulted in increasing attention towards climate finance in different parts of the world. It's pretty common in the Western sense. So in Europe, in North America, it's quite common, but also in Asia, it seems to be a very emerging practice in countries like Singapore, Thailand, and so on. In the South Asian context, we have seen corporate green bonds in existence in circulation in India, Pakistan, in Bangladesh. And that has resulted in regulators taking increasing note of this particular area. If you look at SEBI in India, of course, they just issued a consultation paper on green and blue bonds. And also in Bangladesh, a similar initiative hopefully being undertaken by the BSEC. So in terms of going to the problem directly, I think the most important or the tricky issue in terms of climate finance or sustainability reporting is the definition of sustainability. Because despite our efforts, we have not been able to come up with a global definition of sustainability. So there are different definitions used in different countries, and some of them might be stretching a bit too much. So for example, in Indonesia, government bonds are actually used for irrigation projects, in infrastructure projects and so on. Whether these are actually government bonds or not, we could debate. The absence of a global definition of sustainability has resulted in the emergence of regional definitions of sustainability. The problem of that is that some of these definitions are embedded culturally. So in different cultures, we are having different bonds being branded as green. And again, we can debate how green these are. So you could, as you can see, there are problems in terms of green bonds. It is easy to see the advantages, but I'm just pointing out the problems. A parallel development in terms of reporting, of course, is the development of sustainability reports as a main form of non-financial reports. There are various drives of such disclosures. Of course, investors increasingly preferring sustainability reports, or ESG for that matter, as a way of valuing bonds and investments, and the cost of capital will depend on how sustainable you are in the future. Again, I suppose as an academic, I talk about problems more than solutions. So basically, if you look into the entire financial infrastructure within which such reporting practices are emerging, unlike the IFRS, where we've got a very defined set of standards guiding how accountants should be practicing. In case of non-financial reporting, we have a different set of standards issued by different agencies. So GRI, IIRC, the Sustainable Accounting Standards Board, the TCFD, all these things being problematic in terms of nature. Can this slide be seen here as well? No, okay. So there's no point in going into the next slide, because that was showing the development of GRI in different countries across South Asia. Is it coming? No? Okay, anyway, so I basically borrowed this from GRI. They had just actually came up with this report on GRI trends in South Asia. And if we could have a look at that particular report, India is very much the clear leader of sustainable reporting in the context of South Asia, with 99% of Indian companies actually producing standalone reports of sustainability. Yep. Okay, thank you very much. So as you can see from this particular set of slides, India is a clear leader in terms of such reporting practices in South Asia. It is hardly surprising, because if you look at India's development, the SEBI had mandated business responsibility and sustainability, so BRSR reports for top 1,000 companies in India. So it's mandatory for them to be talking about or disclosing such information. Also, the SEBI had been quite active in terms of taking regulatory initiatives on ESG since 2012. So that's been more than 10 years now. If you look into the case of Sri Lanka, they have the GRI actually, and as I understand, only did this on 3 countries: Bangladesh, India, and Sri Lanka. So I don't have the data for the rest of the countries. I have to apologize for that. If you look into the case of Sri Lanka, it is not a mandatory reporting process. However, despite this, it's quite impressive to see that about 45% of the Sri Lankan listed companies are still reporting on such issues. The last one is on Bangladesh. So as you can see, only 15% of our companies are actually making such disclosures, although I understand the levels are improving in recent times. One of the issues that I could not find in the GRI report was whether these reports are being assured, because I think that is a very important issue that we might be missing in South Asia, the audit of such reports, and I'll come back to that. So just a bit of snapshot on why Bangladesh is, in a sense, falling behind. We did a in-depth study last year talking to companies which produce sustainable reports. So in Bangladesh, as we say, it's quite uncommon. It is a bit common in the financial sector, but very uncommon in other sectors as well. Basically, the Bangladesh Bank, led by the former governor who was just here, was very proactive in terms of encouraging ESG reporting, but things seem to have stalled after that. So basically what we found that from the company management, there was a very lukewarm response towards sustainability. And in many cases, they were simply complying with the wishes of the governor rather than really committing their resources towards such issues. And as I said, since 2016, such issues, such regulatory interventions have been less common. Now, this is hardly surprising, because if you look into the Bangladesh corporate sector, we see the dominance of families who rarely understand the value of sustainability, but also of corporate governance. So issues, for example, such as auditing, are in many cases treated as unnecessary deterrents, and companies are not very willing to spend on audit fees, let alone on sustainability. So it's quite a gripping kind of revelation. So I'm sure that in many South Asian countries, the similar corporate structure in terms of family dominance actually exists. And in those countries, I'm sure we'll again find that the family owners are very, in a sense, reluctant towards adopting any corporate governance practicing, including sustainability. So the 4 companies that we found practicing sustainability did so not because they've been compelled to do it, simply because they're a more ethical board or people inside those banks who really champions or they really wanted to take these things through. I could mention a few names. None of these reports were independently verified. So again, quite a tricky issue as well. So where do we as accountants actually fit in? Now, I'm pretty sure that if you look into the accountants, not in here, but this is a typical media portrayal of an accountant. We share the same hairstyle and so on. But if you look into that, we are not portrayed as a very charismatic person. However, from then to going to this particular issue of treating accountants as superhumans, that seems to be an emerging narrative in recent times. If you look into the narrative set by top accountancy bodies around the world, there's a lot of discussions on accountants being able to save the world. That's how we are being branded in recent times. So, IFAC, ICAW, Deloitte, all these firms are trying to portray accountants with a new image, whether we can save the world. Now, how is that possible? So if you look into the accounting, the profession as a whole, onto the future, as COVID has demonstrated, businesses are, in a sense, trying to find strategies which would make them more resilient from not only from climate change issues, but also issues, for example, in terms of working conditions, in terms of accidents and all that, to make these so that these companies are sustainable in the future. And of course, they will be looking into finance professionals who can understand these issues and take this on board and produce reports around that. And as an accountant, and I dare say, especially as a cost accountant and management accountant, you are in a position to be able to absorb and produce that information, to be able to convince the management that in order to attract capital at the lower cost in the future, you have to be sustainable. So if you look into the RMG sector, it has started happening. So I'm sure that will happen more and more in other sectors. The second thing that I wanted to point out was the reliability of ESG reporting. And this is where, of course, the chartered accountants would come in. So if you look into most of the sustainability reports being produced in South Asian case, these are not verified by an independent auditor. As a result, these are like a wish list. So you could just list anything and claim that we have done this because nobody has verified that. So this is where auditors would need to come in. And we have seen success of similar initiatives in our country. For example, in Post Rana Plaza, we have seen certifications being done in our R&D factories, and that has been a major success. So these things can actually work in the context of developing countries such as Bangladesh. Otherwise, if you don't have an audit done, it looks like a ritualistic practice. So you're just having a tick box of sustainability, and that will mean nothing in the longer sense. So accountants, of course, have a massive role in this entire landscape. So of course, accountants would be at the forefront of such initiatives in the future. However, in order to do that, we would need to speak up. If you look into this room full of accountants, we are not very good in terms of communicating issues to others. As a result, we seem to be sticking to numbers only. I think it is time to move forward, just go beyond the numbers, talk about issues that really affect the society, issues such as working conditions, wage levels, climate changes. And once we start incorporating those things in our ESG reports, we could start being viewed as people who can actually save the world. So basically, in terms of, I hope I've not taken too much time, in terms of my conclusion, what I'm going to say is that ESG is going to be the thing for the future. So if you are now just a young accountant, as many people are here, it is going to be your future. So a number of major issues that you will talk about will surround around ESG. But also, if you look into the case of South Asia, as we said, we have got, because of the institutional surroundings around us, it is very difficult to expect that companies will be taking this up on a voluntary basis. So I think there is a lot of room for regulatory intervention. I can see the BSEC commissioner here. So I think it is about these regulators trying to incorporate and take these things seriously and compel companies to go for this kind of disclosures. This is where auditors and accountants will hopefully have a fantastic role in terms of saving the world. So thank you so much for coming here and listening to what I've said. I hope that in future we will have the scope to talk about it again. Thank you so much.
Thank you. Thank you, Dr. Javed, for your valuable presentation. And special thanks to you for maintaining time. Now, may I request Mr. Muhammad Al Maruf Khan, FCA, for his comments. Before going, please let me introduce him. Muhammad Al Maruf Khan, FCA, qualified as a chartered accountant in 1992 from the Institute of Chartered Accountants in England and Wales. During his 30 years of exposure in business and practice, Maruf Khan established himself as an expert in corporate finance and in most field of securities industries. He is a partner, advisory services, Hawladar Yunus and Company, Bangladesh. Thank you, Mr. Maruf.
Hello. Yes, thank you, sir. And
Thank you for your excellent presentation, Dr. Siddiq. And before I just comment on the presentation, I just like to just dissect the presentation in three sections that he has made actually. He talked about the green finance, then he was talking about the sustainable reporting, and then he was talking about the role of the accountants or what we could do in the profession. And because of time constraint, I will try to just prioritize some of the areas. Then if I have more time, I can really cover the rest of it. First of all, I just like to clarify, because I myself was in a kind of a dilemma when I was going through the amount of authority in the areas of sustainable reporting. Too many organizations were in fact producing various standards. So let me just pick up a few of the names that you might be aware of. Global Reporting Initiative, GRI, the lady is here. International Integrated Reporting Council, the Sustainability Accounting Standard Board, SASB, United Nations Global Compact, UNGC, CDP, Carbon Disclosure Project, ISO 26000, and there are many more actually. There were some task force assigned for this thing. And there were other smaller committees within these organizations. So what has happened in last Glasgow summit, there was a consensus that this cannot go on a longer term basis. This needs to be a unified to a very right set of standard for sustainable reporting. And then during 2021 and the just few months of 2022, a lot of things has happened. I just want to just summarize what has happened. So then you'll be able to see who are really running this sustainability standard things. So the IFRS Foundation, they have actually merged the Sustainability Standard Board. So, and before that, Sustainable Standard Board created another one, VRF, Value Reporting Foundation, and that has also been taken over by IFRS Foundation. So there is no Value Reporting Foundation, there is no Sustainable Accounting Standard Board at this moment, and there were also small reporting standard setting organizations are also not there. After this merger, IFRS Foundation now has two segments. One is International Accounting Standard Board and International Sustainable Standard Board. So these are the two organizations within our non-IFRS Foundation who are actually directing our future standardization. But our other partner, GRI, they are still there. So the authority itself now lies with the two organizations who will be directing for future sustainability standard issues. The problem right after that, this GRI has issued 84 pages of comments sent to the European Sustainable Standard Board, stating so much of agreements and areas of disagreement that needs to be aligned in order for us, for the ISB, ISSB to be aligned with GRI standards. So what I try to say that there will be at least a couple of years before we come to a situation where we would really know what the standards are going to be like. The other thing I just want to just give you a perspective that after this, our IFRS created International Accounting Standard Board and International Sustainable Standard Board, there is two exposure draft has been issued, S1 and S2. And one is framing how the financial information will be related to the sustainable reporting information. And again, on the S2, which also is focusing on the climate related information related to the financial information related to the financial sustainable reporting. So there are some challenges we can all see. But before I just go into further, I just like to bring into the Bangladesh context what Bangladesh has been doing since 2011. There was a change in our constitution. 18A has been inserted, which will protect our country's environment. And right after that year, and there was a green financing
scheme was introduced by the central bank, and then CSR reporting was introduced, and that was also being done by the commercial banks. And then GRI was helping them to report. That was all on voluntary basis. But most recently, there are ESRM guidelines on environmental social risk management guidelines has been introduced. And they have also given a lot of some exclusion list and also some list that the organizations like banks will have to follow. So that has really given a new dimension as a challenge for the accountants, which I'd like to highlight. One is that when we are talking about central bank's recent ESDD, there is a checklist that all the banks now will have to follow these guidelines or checklist to rate before they place it for the financing. And that is going to be, they are now considering the risk issues, and it is reducing the credit rating of many of the potential investing entities. And what is going to happen in that situation, as ISA 570 requires about this going concern issues, that this future financing ability of the banks to the previously financed entity may be questioned. For example, the compliance factory child labor is an issue that can stop the financing to that entity. For example, in Bangladesh, we have Ministry of Environment who is in charge of giving license to the organizations. There are 4 gradings, but if you look in the central bank's gradings, the risk gradings are different than the Ministry of Environment grading. Now, if there is any change of the Ministry of Environment in terms of which are the areas which will be financed or which are not environmental friendly, as per the green finance policy of the central bank, those organizations may not be financed anymore. So these are the issues and that we need to look at. But what Dr. Javed Siddiqui was talking about, what the auditors or accountants they're going to do. We have a standard IS 720 where the accountants, the auditors are required to look into the financial statements and the financial information which are part of the annual report, but there are some exclusivity, there are some exclusions given. For example, sustainable report, corporate social responsibility report, diversity and equal opportunity reports, product responsibility. These are the lists which are specifically excluded as part of auditor's responsibility. Now, when you're talking about, he has mentioned about to what extent sustainable reports are independently verified and who are going to certify those, and auditors for sure by the 720 standard are not required to go through this information. So they're actually what this new initiative taken by GRI and our IFRC are going to do is looking into those areas to make sure that corporate disclosures are adequately captured and interconnected between financial and non-financial data. The other problem is that when we are talking about sustainability, the very words talks about the futuristic issues, but the financial numbers are historic. And so there will be a great demand from the user of the financial statements or user of the annual reports, which will describe, for example, the carbon emission, how much will be reduced in future, and who is going to certify that what are the level of carbon emission this organization can actually achieve in, say, year 10 from today. Other thing I just want to just briefly finish that, for example, very recently, central bank has also given some guidelines on bond issuance of bond related to the green financing. And that has really given a scope for the central commercial banks to go to the public investors, raise the money and invest in the sustainable finance areas. So that this is a great opportunity for the commercial banks, and also they can just now ventilate what the private sector fundings are available in the market. So far, central bank has issued 8,000 crore of bond, which has been utilized in some water purification facilities at about 4.35% lending terms. So what I wanted to say, because there are many opportunities coming up now in the sustainable finance arena that can be taken care of. Regarding standardization issue, ESG doesn't have a standard. It is industry specific. Our central bank has given sector, made exclusive list, made the taxonomy very clear, where to invest and how to invest. I have seen it is one of the great documents that central bank has really initiated, and they have also created this quarterly reporting requirement. They have given the Excel formatted checklist. If these are really reported, we will be able to see the compliance and also the implementation status of the finance being made by Bangladesh. And I'd just like to stop here. If I have any more time, I might just have to come back again. Thank you so very much.
Maruf, for your detailed presentation and detailed comments. Now may I request Mr. Chandrasekhar Vasan Chaitali for his presentation. Mr. Chaitali is practicing as a chartered accountant, senior partner CV Chaitali and Company, member Central Council of Institute of Chartered Accountants of India to 2019 to 22, Chairman Taxation Committee and Vice Chairman Banking, Financial Services and Insurance Committee. Mr. Chandrasekhar Vasan.
Honorable Chairman, Mr. Mahmood Ahmad, Technical Paper Presenter, Mr. Javed Siddiqui, and my co-panelist, Mr. Muhammad Al Maruf Khan, FCA, and Dr. Aditi Haldar. It's my pleasure to interact with you on this topic of sustainability. And I would be talking on three aspects in 2 minutes. One is sustainability, another is the sustainability reporting, and thirdly, the way forward. Now, what is sustainability? To put it in simple terms, there may be two aspects. One is the need-based and other the nature-based. As you are aware that in this planet, there should be sustainable living for each and every person. So each person should get his basic needs satisfied. So the poorest of the poor also should not be starving. And to this effect, since I'm in Bangladesh, let me place on record, the Bangabandhu's vision was to eliminate economic inequality, and he took first 5-year plan to rebuild the economy with the object that the poorest of the poor should be satisfying their needs. In fact, ICAP President Muhammad Shadat Hussain has stated that Bangabandhu applied his accounting knowledge for elimination of disparities between the rich and the poor. So without uttering the word, this sustainability, this is the very objective that he followed, that let there be sustainable living for every person in the country. So this is first aspect of sustainability. The second aspect is, while we are exploiting the natural resources for the present consumption, we should not pledge the future of our subsequent generations. Take, for example, we need furniture, maybe with the growth of population, with number of enterprises coming in, there may be much more need, so there would be afforestation. So there would be deforestation. So that has to be coupled up with afforestation. And here also you have local example in the form of efforts by the present Prime Minister of the country, that they have taken up this afforestation initiative. And it is stated by Honorable Prime Minister Sheikh Hasina Madam that government is working on afforestation, environment development. And I'm told that the project of gardening and also tree plantation at each home is being taken up. And the target has been set that today the forest coverage is 7%. By 2030, it should be 22%. So two things. One is the poorest of the poor, for them, the sustenance should be sustainable living should be ensured. And for the nature, we should ensure sustainability in a sense that we should not destruct the nature so that the future generations are not able to satisfy their needs. Now, having realized this, the concept of sustainability, we have to talk of reporting because ultimately there has to be some measurement of sustainability. So there the role of professionals come, that how this particular sustainability should be measured. And let me tell you now, the world has become enlightened. We also heard of green finance, the stakeholder priority for those enterprises which are really following sustainable policies. And let me put in a layman's language. All of you might be aware of the story of that Salim Chacha who used to sell caps. He used to pass through jungle and monkeys stole their chap while he was napping. And then he realized that monkeys imitate you. So he put the cap on his head, put it down, and then everybody has, every monkey also threw the cap. Today is not the generation of Salim Chacha. Now his grandsons have come into play. So the grandsons, while passing through the jungle, not following the advice of Salim Chacha not to sleep, he also sleeps, and his caps were stolen. And thereafter, he knew that, yes, my grandfather told me that you put cap on my head, put it down, immediately all monkeys will throw, I will collect the cap and go ahead. But then he looks at the monkeys, they were looking, so he puts cap on his head, puts it down, nothing happens. He repeats it for 2-3 times, but nothing happens. And then one monkey tells, sir, we also have grandfather. So now the things have changed. Earlier, we were contented in reporting by enterprises on profits. And we used to say that, okay, if the profits are substantial, you have done brilliantly. Now, no more, the profit is the only barometer for judging the performance of an enterprise. So coupled with profit, now we have to tell the public at large or the stakeholders that what we have done for the purpose of people whom we are engaging and the humanity. And thirdly, the planet, for this planet, what we have done, whether we have created carbon emission, whether we have restricted planet, and for conservation of these natural resources, what the corporates are doing. So that is what the ESG reporting that was referred to earlier. So this is as far as reporting is concerned. Various committees are there. There are a number of reports which have come up. Coming to way forward, now what we have to think of as professionals, that what is the role of an accountant in this sustainability initiatives. So as we have seen that we understand as professionals what is meant by sustainability. We also know what is the reporting. So the role cut out for the professionals would be really to do research in this area of sustainability and come out with various alternatives where there has been destruction to the people, to the planet, how the resources have been conserved. After having done research, what should be the reporting? So reporting parameters should be laid down by the profession, and such conferences would certainly a step towards this particular aspect, that we decide what various minimum aspects the enterprises should report. Thereafter, there can be additional aspects that the enterprises can be communicated to report. After having reported by the enterprises various parameters, who will state that these are appropriate or not? So again, the accountant has to check those parameters, whatever has been reported by the enterprises on sustainability initiatives, that is appropriately reported, so that the stakeholders can judge whether the particular enterprise is following sustainable policies or not. And once they confirm that yes, sustainable policies are being followed, all the stakeholders, including bankers, financiers, government, they also will be giving more discounting to such enterprises. Besides finance, even the government policies can tilt the enterprises to go towards sustainable initiatives. So maybe they can provide subsidy for using, say, solar power, or they can make those enterprises more popular which are using sustainability. And to that effect, let us take example of Cape Town, where the water was absolutely depleted by 2017-18. So in one of the policies, they used to announce monthly the name of those consumers of water who have very high consumption of water. so that they were ridiculed. So likewise, in case of sustainability also, the government can make it mandatory to report. And today in India, for 1,000 public interest enterprises, now sustainability reporting is mandatory, and gradually, maybe in coming 3 to 5 years, for all other enterprises, it would be mandatory. So here, the role of professionals is really significant in advising the government, advising the enterprises, and making it known to the stakeholders that today, what you have to look at is not only the profits, but also you should look at and give discounting to the reporting on people and planet. Thank you.
Thank you very much, Mr. Chandrasekhar Vasan Tritale, for your comments. As per the list, as per the program, the next speaker is Sanjay Bandara. Mr. Sanjay Bandara, are you here? If he is not available, we can go to next speaker. The next speaker is Dr. Aditi Haldar. Dr. Aditi Haldar is an expert on sustainable development with over 26 years of experience. She had been part of various national, regional, and global advisory committees, councils, task force for the government, regulatory bodies, professional, and academic institutions. She is an environmental scientist with a PhD and worked in diverse business sectors. May I request Dr. Aditi Haldar for her comments.
Can I shut this up? Yeah. Good evening, everyone, and thanks to my previous panelists and the chair of the session for introducing this very pertinent session that we have today. As you all know that we are hearing many new topics maybe for many of us in the room: green financing, sustainability reporting, and so on and so forth. I just want to give a little bit of history that GRI, the pioneer of sustainability reporting standard, has been now, this is our 25th year. So when we started in 1997, there was a lot of, confusion in the market saying that why do we need sustainability reporting? And I think the question still persists. So I would like to just touch upon 2-3 points. Why do we really need sustainability reporting? We have financial reporting. We know the wellness of the company. But do we really know the wellness of the company just with the numbers and the finance? That's the question that we need to ask. And therefore, I think today the risk management and the risk analysis and the assessments are all not looking at financial wellness, but also environmental, social, and governance. Therefore, we know that every business survives on resources like air, water, soil, and so on and so forth. They look at people for productivity, and they look at society where the services and products are going to be used and sold. And therefore, the money that will come is not from anywhere else. It's the people who will be buying. So therefore, society, if it is not prospering, who will be actually buying those products? So does business need to have the responsibility to take care of the wellness of the society? Of course, because business is also part of the society. It is very much an integral part, and that realization came many years back. But in developing countries like ours, in this region, maybe we are so concerned about concentrating wealth in few families, few people, few individuals and entities that we forget why are we existing as business entities? That's the first question. Second is, why do we need to measure and disclose information on environmental and social issues? I think one of the panelists mentioned that if we don't measure, we cannot actually manage. Therefore, today, the question is about green financing becoming an opportunity to attract more money. I'm sure all of us want to aspire to have more money, better lives, right? So if we are looking at that, green financing is an opportunity to take care of environmental issues that are hitting the region, the country, the business, and can we take care of those environmental issues while we concentrate on economic development for investments to move to those projects which will be more responsible on those environmental side. Number one issue in the region is climate change, and that is not only in the region and in this country or in India, where I come from, but it is throughout the world. Many organizations are talking about climate change. In this region, I personally feel water is a major issue that we are not maybe looking at. What about waste? We are moving to becoming a developed country. We are moving to buy things every day. Look at the amount of plastic packages in every product that you receive through Amazon or Flipkart or anywhere else. What happens to the waste? Look at the biodiversity that we are all endowed with naturally. Are we thinking of biodiversity as part of our life? Or we think the forests and the sea and the rivers, they're very far distant from where we live in cities, and therefore we don't need to take care of them. These are the issues which will attract investments where entities are going to take responsibilities on water, pollution, waste, climate change, and of course the people. So green financing is not a theoretical, terminology which is there. It is very much part of us. And the more we start thinking about them, we don't need to be countries where we need to borrow money, but we will be countries where investments will come to our door knocking and saying that you are responsible, you are taking care of all your resources, and we would like to give money to actually invest and get back money from those projects. So this is where it is a big opportunity. For GRI, for 25 years, we are here because we have listened to multi-stakeholder, started with civil societies making a lot of noise, saying that businesses don't disclose information on oil spillages and so on and so forth. And therefore, we listened to them and we started in 25, for the last 25 years, we are working. We have many indicators, and we are now in 2021 engaged with IFRS, and we are engaged with AFRG. We are trying to bring two things. We are trying to say that it's not about how companies are managing their environmental and social issues within the boundary and saying that my money is saved. We are also trying to bring to the fold of the managing directors and the CEOs and the decision makers to say that what about the impacts which happen outside the control of the business entities? Who will be responsible? Who are accountable? Therefore, the purpose of sustainability reporting is, of course, disclosure, which is the starting point, but disclosure leads to transparency and building trust with different kind of stakeholder groups. Trust is maybe not measured anywhere. Trust is not written anywhere, but this actually looks at a long-term sustained growth of any business entity when there is trust in the market. So in India, there are these top 1,000 listed companies, 99% of them are having sustainability reports. Question is, what are those matrices and who understands those matrices? What is the implication of each indicator that is measured and disclosed and given out in a report? The role of all of us here in this room and many more chartered accountants and cost and management accountants is great, because they are the people who can understand the indicators, look at the financial implication of those measurements of environmental and social issues, turn them to the decision maker of each business entity and give them advice on how they can consolidate and focus on where the risk and the opportunity lies. It is not just about the numbers which we have been used to and we are proven to be experts, Now is the time to expand our capacities and our potential as human beings to bring forth the understanding that environmental and social issues are important and they are directly related to the financial well-being of a company. The second point that I wanted to bring here is that the reliability of the information in sustainability reports, the assurance. This has been a long discussion and debates, at least in GRI for last 25 years. This is the time now when IFRS is coming together, EFRG as from the European Union is coming together to work with GRI. Let's put our mind to also bring about a change in the assurance process of sustainability reports. Reports can become voluntary, but reports, whether they are voluntary or mandatory, they should be audited by a third party for understanding where the gaps are. If the gaps are required to be kind of taken care of, let's do that. Let's start with 1 or 2 matrices, 1 or 2 issues which are most important, most material to the business entity. So therefore, we first need to look at sustainability report as not just a mandatory requirement. Second, not just a checklist that needs to be filled up and submitted to the regulatory authorities, not just as a document which looks good, but let's look at it as a tool that will give us a great well-being for a long term, for a sense of purpose that as a business entity, one can fulfill in the society. So with this, I would stop here because I think time has run out and I think our previous panelists have covered most of the points. And these were the pertinent points I felt I should share from GRI. Thank you.
Thank you, Dr. Oditi, for your comments. Our last speaker is Mr. Niwan Watanes. He will be connected online. Okay. Mr. Niwan Watanes currently serves as Chief Financial Officer of SoftLogic Life Insurance PLC and serves as a Governing Council member of the Institute of Chartered Accountants of Sri Lanka. He is the youngest CFO to be recognized as CFO Excellence Award from CMA Sri Lanka. He also serves as Independent Director at JFS Holding Limited. Now, may I request Mr. Niwan to give his comments.
Thank you very much. Hopefully I'm audible to everyone. Thank you very much for kind introduction and good evening, everyone. I think given the time constraint, I will try to cover the things which are not covered here. And 3 points I would like to mention here. First point is that Sri Lankan perspective where we are with regard to the sustainability reporting. Second point is what are the key sustainable reporting initiatives we have taken recently. Third point is way forward and role of accountant, how we see it. So starting from first point where we are in sustainability reporting perspective, I think previous panelists also mentioned that Sri Lanka, out of the listed entities, more than 60% of the entities following the sustainability reporting guidelines, including the GRI as well as the integrated reporting guidelines. And one of the key feature we noted is recently, so a lot of companies try to get the third-party assurance, even for integrated reporting. That's a very positive sign we noted recent years. So that's a good sign for Sri Lankan perspective. And however, we saw that there are, when somebody is following GRI or IIRC or SASB, some kind of guideline, there is no consistency or comparability. So therefore, with the ISB initiative, CS Sri Lanka came up with the non-financial reporting framework, which provide the common framework to provide the non-financial information. And in this regard, there are some key features we introduced, and this framework developed based on the commonalities of existing framework. So therefore, somebody wants to take the GRI, following this framework, they can obtain the GRI assurance. And when developing this framework, we were mindful to address the key issues that currently we have. That is, that a lot of people reporting non-financial information on narrative terms. And there is no consistency of the information, like introduction of KPIs. So people include the KPIs here and there is no consistency. And we ensure to provide some strategic direction and future-oriented information, and that framework itself provide that. And other critical angle is that to ensure the concise of the information, we brought separate concept of co and mo approach, along with other to improve the credibility of the information. We brought the assurance report. And with the time constraint, I will summarize this one in simple terms. And with this non-financial reporting guideline, now we have incorporated this one to local accounting, local annual report awards, where that company will encourage to follow this. Plus, we discussion with the regulatory bodies to ensure that these are going to be adapted in near future. And we have developed the roadmap, whereas listed entities, we plan to give 1 year voluntary basis. Thereafter, make it mandatory for listed entities. Unlisted entities also, we encourage to follow this. And way forward time frame is that. And role of the accountant and how we see the chartered accountant. So accountant perspective, we see this as not compliance exercise. We see this as a value creation exercise. That's a message we are taking to the public. If somebody is following these sustainable reporting frameworks, where their business performance can be shown more reliably and more valuably to the investors, where they can get more value to the business. So with that, we see that role of accountant has to be in line with the partner in progress rather than reporters of progress. I think that's the alignment we want to cultivate among the chartered accountants and accountants. So that's a overall summary from my end.
Thank you, Mr. Watanes, for your comments. Now, as per the program, summing up session by the chairman. We have started at 7:15, now it is 7:13. 1 hour has already been lapsed, and there are another technical session. You want to speak?
Thank you, Honorable Chairman. I'm Anwaruddin Chaudhry, past president of the Institute of Chartered Accountants of Bangladesh, and presently serving as a member of the Consultative Advisory Group of the International Public Sector Accounting Standards Board. I'll take a couple of minutes, 1 minute to respond to the keynotes, the speaker's comments about the audit of sustainability reports. I think we lack both the capability and the capacity to do so. Maybe taking the cue on a positive note, from our Honorable Investment Advisor, Mr. Salman F. Rahman, we can develop regional expertise on that line so that we are in a position to do the audit of sustainability reports. India can take the leadership because India, under the sponsorship of the Confederation of Indian Industry, has developed that research paperwork, if I'm not mistaken. I think Ms. Aditi Halda can bear me out. So I think India should really take the lead to that end and bring about pooling of resources among these countries so that we develop relevant expertise in carrying out an effective audit of sustainability reports. Otherwise, it won't serve the purpose. GRI has done its best. It has met, even I know for one, the listed companies at Dhaka Stock Exchange and elsewhere, but that effort has not yet been undertaken. if I'm not mistaken again. Now, the second point is to add on to Mr. Al Maruf Khan's comment about those involved with developing sustainability reporting standards like the Sustainability Standards Board, the GRI, IFRS Foundation. In addition to that, we have an active role by the OECD right now. And in addition to that, at the initial invitation of the World Bank, the International Public Sector Accounting Standards Board of the International Federation of Accountants has taken leadership of developing standards for sustainable reporting in the public sector. And as Aditi just now concurred with me, actually I catalyzed them to interact with the GRI as well, although they are effectively in the private sector. Last month in September, a standard setter meeting took place in Cascais in Portugal, where all the standard setters met together, you see. And in that meeting, I think IPSAS-B has also come off its heels and agreed to cooperate with GRI, although that's not of much relevance at times, to develop standards in the public sector, which is equally, if not more important than the GRI initiative undertaken for more than 25 years. And if we want to really promote, I think green financing is definitely a catalyst for sustainability reporting. And there could be fiscal incentives and other measures which may be taken up by the respective governments for reduction in carbon emission and then electric cars and the like. Thank you. So I just wanted to make the point for the public sector, which is very important because the government organizations need to be alert about its own responsibility as well in terms of the environmental, the social, and the governance aspects. I think that is a very crucial role. Thank you very much, sir, for allowing me the opportunity to add on.
So, Mr. Anwaruddin Chaudhuri, for your comments. Ladies and gentlemen, over the last 1 hour, we have been discussing on sustainability reporting and green finance. And during this time, we have listened to one keynote paper presented by Dr. Zawed Siddiqui, and also listened valuable comments from 4 panel speakers. And I believe all of us have been benefited from the discussion. Personally, I'm enriched with the comments and the presentation by Dr. Siddiqui. The sustainability reporting and green finance, these are comparatively newly introduced terms in finance and accounting, which has implications in climate, environment, and sustainable development challenges. However, these terms are widely discussed in development discourse in recent days, and it's getting popularity. And like many other South Asian countries, this issue got attention from both government of Bangladesh and our central bank also. Bangladesh is the first LDC to prepare a climate change strategy and action plan in 2009, also formed Climate Trust Fund in 2010. And Bangladesh didn't wait for any foreign assistance or support, and allocated money for the trust fund from his own revenue budget. And central bank also took a pioneering role in this area, declared the green banking policy in 2011, and also recently in this year, in September 2022, declared policy on green bond financing for banks and non-banking financial institutions. As a whole, Bangladesh, through its perspective plan, 5 years plans, Delta plan, or SDG implementation strategy, and climate prosperity plan, which is under preparation, which has not been declared formally as yet. But through all these documents and all these plans and program, Bangladesh supporting both adoption and mitigation programs related to climate, environment, society, and sustainable growth, inclusive growth, and sustainable development. However, as we have seen from today's presentation, that unfortunately Bangladesh's progress in this sustainable reporting is not so what I'll say, that actually Bangladesh could not make much progress in this area in the case of sustainable reporting. As we say, yeah. Yes, I believe everybody knows it. Everybody know it. Okay. And as we seen from his presentation that, and he referred GRI report to 2020, that 99% of the listed companies of India produce sustainability report, 45% followed by Sri Lanka, and this rate is only 15% in the case of Bangladesh. And I believe that Bangladesh has scope to do better performance in this area. And people's awareness on sustainable report and green financing is increasing in the global context. And he has also mentioned about ESG, environment, social, and governance issue. Reporting is also receiving significant attention from international community. And in addition to normal return on capital, as Dr. Javed has mentioned, that investors are expecting some kind of social and environmental benefit out of investment. And under this perspective, under this background, if our business or our investor want to be competitive in the international market, or at least want to maintain its competitiveness in international market, we have to give due attention on this sustainable reporting. Sustainable, we will give more attention in this area. And I offer my thanks to SAFA and ICAB for inviting me here. I'm honored and benefited from this technical session. Thanks to keynote speaker and panel speakers. Thank you all present here. Thank you very much.
Ladies and gentlemen, I would request the President ICAB to kindly be on stage for presentation of crests. The first crest recipient is the session chair himself, Mr. Mahbub Ahmed. Thank you so much, sir, for being here. Mr. Mahbub Ahmed is the former Senior Secretary of the Government of Bangladesh. And the next one goes to Professor Dr. Javed Siddiqui. He is the keynote presenter. Dr. Siddiqui, you did a good job. We learned a lot from you. And next one goes to Mr. Muhammad Al Maruf Khan, FCA. And then Mr. C.A. Chandrasekhar Vasant Chitale. Finally, Dr. Aditi Haldar of GRI. Thank you very, very much, all of you. So we are getting ready for the technical session 2. A photo session for the technical session 1. Thank you so much. Yes, ladies and gentlemen, for the technical session 2, we have Senior Secretary of the Ministry of Commerce of the Government of Bangladesh, Mr. Tapan Kanti Ghosh, as the session chair. I would request Mr. Tapan Kanti Ghosh to be on stage right now, sir. And the technical paper presentation to be done by Mr. Shabir Ahmed, FCA, Council Member, ICAB, and partner Hoda Vasi Chaudhary and Company Chartered Accountants is. What are things? Word of thanks, actually, word of thanks. There's a mistake. Word of thanks by Vice President ICAB. Mr. N.K. Mobin,